Hello again, this is Robert Schein, Managing Director and Partner of Blanke Schein Wealth Management. Today is October 5th of 2020. It's a Monday, and there are a lot of headlines over the weekend that we were paying attention to. Markets are moving, so let's get right to it, and thanks for watching. So right out of the gate, we have futures up, markets are up, and they're up substantially. And so there's a lot of questioning as to why that is. The good news is we had President of the United States, President Trump, seems to be progressing nicely. He looks like he's going to be checking out of the hospital later today. That's always positive news, especially on a vaccine and therapeutic front. That shows that the therapeutics are sort of catching up as to what we thought would happen and what markets are actually paying attention to. Meaning, the virus can go anywhere, and the virus, if you think about it, over 50% of the G7 leaders around the world have been infected by the coronavirus. Kind of strange to think that the most powerful people around the world, around the globe, who have theoretically the most protections, one way or another, and over 50% have been infected by the virus. Just goes to show you can get it anywhere, and how sort of rapidly the coronavirus does spread. That being said, we're seeing the therapeutics and the medical field and technology catch up as a positive. As we just saw this. And I think markets are seeing that. As I said before, it looks through into the future, and we know that viruses don't go away. They really don't. But we can sort of adopt, adjust, do everything necessary in society to, and medically speaking, to ultimately live with the virus, and so that it's not so fatal as it once was originally when we started this. And it goes into my first topic, which is polling and models. Now, if you remember, when we first started the daily updates, the modeling on the coronavirus, both on the experts in the medical field and around the world, basically had probably the worst numbers we've ever seen. They were downright scary in terms of the amount of not only infection rate around the globe, but the death rate, right? The number of people that were actually going to, if we go back to May or March, April and May, it was a very scary time. It really was. What we learned about 2020, and ultimately my take home point is that all the modeling and all the polling potentially could be wrong. That's the one loser of all of this, and it's a net benefit for all of us, right? So the modeling was way, way, way off, and positively in the sense that the virus is serious, it is deadly. However, those models that predicted sort of what could happen ultimately never played out, and thank God for all of that, truly. That being said, as we look at 2020, we look at the modeling and predicting, be careful. Don't buy into what we're seeing right now. If you look into sort of even in the national polls, no one's to know right now who's going to win this election. And trust me when I say this, if you look at history as a guide, the next 30 days, plus or minus from an election cycle, are going to be huge in terms of, it's a lot of time. The news cycle changes over, I wouldn't even say 24 hours, it's almost instantaneously these days. So the polling is showing a 14% national lead for President Trump, and markets are up as it relates to that. One, because he's checking out in the hospital, and the therapeutics are actually helping that as on a grand stage to show Americans that medical technology is catching up. But also, if there is a 14-point lead in the national polls for Vice President Biden, that shows that there's certainty that Wall Street sort of can position accordingly as we get closer to the election, meaning that Biden potentially could win. But we're going to see all of that change over the next few weeks. One indicator, if we look at history, is the S&P 500 and the dollar. So if you have the 3 months prior to the election and the S&P 500 is up, which it is right now, and it seems to be that trend is going to be that way. We will have an up 3-month period of time for the S&P 500. Time will tell. But you have an 87% chance that the incumbent wins. Since 1984, it's a 100% indicator of the incumbent. It's a positive indicator, meaning it's been right 100% of the time in terms of predicting who would be in the White House. If you go back to 1928, it's an 87% chance that the incumbent will be, if the 3 months before you have the equity market or the stock market measured by the S&P 500 up prior to the election. That just shows that the sign of the economy is going well, and that people are less likely to change things in the middle of a sort of an economy on the upswing. So that's why we look at the S&P 500. Equally, another gauge is the US dollar. The US dollar has been declining. And if that decline happens over that same period of time, the 3 months prior to that election, the incumbent wins 87% of the time. It just happens to be that number again. So those are the predictors. If the dollar's down and the market is up, or which that's where we are as we stand early October, if that trend continues and persists, we could either have a pretty good indicator of what's going to happen, or maybe not. Modeling and projecting could be off. Another thing you want to take a look at is the approval rating. If the presidential approval rating stays about above a 46%, the incumbent party gets reelected. And Trump happens to have the approval rating there, and it's trending a little bit higher. So we'll see how the next couple of weeks the news cycle actually treats that, even though that Biden is winning nationally, right? So there's a lot of information out there, and it's all swirling around, and it's all like, wait a minute, which end is up? I think what really, really matters most, and what we should be paying attention to, is theoretically the lead in the swing states, right? If you think about the Electoral College, you've got Arizona, Florida, Georgia, Minneapolis, Michigan, North Carolina, Ohio, Pennsylvania, and Wisconsin. Those are the states that matter, right? You could win the national, one of the political parties could win the national vote, but it comes down to Electoral College. So as it relates to that, the political numbers there are tightening. That race is going to get a lot tighter as we get closer towards election. It normally does. I could definitely see this happening again, and it did sort of back in 2016. So we really don't know, right? No one really knows. I would say be careful of affirmation versus information. Affirmation is the some stuff on social media that makes it feel good because you think a specific way, one way or another, versus true information. And that's sort of where markets are like coming at this, saying they're looking forward. Earnings are going to be positive for the S&P 500, better than expected. Again, we have more earnings coming in, and as I reported last week, we had 13 out of 14 that are reporting. Now we have 18 out of 19, and the average upside beat is over 27% on upside earnings expectations. So markets are paying attention to earnings and certainty. They want more certainty. Just be careful of polling and everything else. And as it relates to the economy, the Ims Manufacturing Number came out today at 54.6. That's positive. Anything above 50 is an expansionary economy. So again, the fundamentals of the economy, aside from unemployment and the employment picture at large, that needs a lot of work, are all the things that the market's paying attention to. And finally, again, don't hold your breath, but the stimulus deal, could there be one? Markets are up again on the anticipation of that. I think the coronavirus sort of setback on has really brought the Republicans back to sort of a compromise of coming up from the 1.5 trillion. And remember, the Democrats are looking at 2.2 trillion, so somewhere in between. And there's a whole bunch of different differences in the middle. But if you get something like the last 48 hours in the news cycle, President Trump goes to the hospital, things do change. And so that does sort of put people back to the table as it relates to helping the American public. And hopefully that does play out. Markets are actually anticipating that. But we will see. We will see if Congress gets it done. But that's our update for Monday. Thanks for watching. And again, be careful of the polls and be careful of all the modeling, because if anything has been shown us, 2020 is not over yet and anything can change. So thanks for watching.